You are listening to Product and Growth Show.
Hey everyone, this is Product and Growth Show. I'm Pavlo Pedenko, and I'm excited to record an episode with Ivan Vasylchenko, tech entrepreneur and a former chief operating officer at Trade Republic, a German neo-broker with almost 8 million customers, according to what I Googled,
10.
across 10 million now. Okay, 10 million customers now, 17 European countries covered. The latest valuation, according to Google, was 5 billion USD. That's insane. Welcome, Ivan. I'm glad we are finally recording this. Welcome to Product and Growth Show.
Hi, Pavel. Thanks for having me. I'm really excited to talk to you today and this morning on a sunny day.
We met with Ivan last June in Berlin, and after a few drinks, we ended up having an incredible and a very open conversation about fin crime and currency exchange arbitrage and fraud in fintech and all these things people from fintech don't really like to talk about in public. And I pretty much immediately decided I wanted to record a pod with him. You ghosted me for almost 3 months, and now we are finally here. So Ivan, why would you not introduce yourself before we jump straight into that?
Thanks for passing. I'm originally from Ukraine, from Kiev. Came to Germany 2008-9 for studying. Studied in Berlin, studied in classical and finance because back then tech also didn't pick up that much, maybe also in Ukraine as well. And in Germany it was also just doing their early steps. So in Berlin the tech scene, the VC scene was already starting but very slow. So it was mostly websites that now, like companies that became huge like Zalando and others. They were starting this quite often some kind of copies or adoptions from US, and mostly it was in fintech. So after studying, I was thinking, hey, well, I still study finance for some reason, so I would like to focus first on this side, and that brought me to Frankfurt, where I worked in consulting for years. And my bet on that day was that, hey, at some point fintech is gonna get disrupted as well by tech. It's just a matter of time. And that's what I saw already picking up in 2014, 15, 16. So then N26 launched, Robinhood launched in US. And of course, while working in Frankfurt and doing very classical consulting work, so I was advising banks, stock exchanges, investment funds on lots of strategic and operational topics that had lots of connections with market infrastructure, trading, clearing. But I saw this kind of, the classical side of things. And then when I saw that fintech picks up in Berlin, I visited Berlin end of 17, a couple of times with a couple of friends of mine, actually from Kiev. They wrote me that they were going to a couple of hackathons. They would like to participate, they're developers. And I said, hey, well, I think it's a cool idea. Why not go there together? So I took a couple of days free, and then we traveled to Berlin, and we actually won one of them. Actually, it was the first one we participated. It was called Bankathon, organized by Figo, I think it was called. It was an API provider back then. And yeah, just like the vibe, how hackathons are ticking. So people just come and grind 1 or 2 days and exchange ideas and create something that sometimes works less, sometimes works more, but at least there's this creational energy, and that's brought me already to thinking what to do after consulting before, because I didn't see myself very long term in this business. So growing to, let's say, partner level wasn't kind of my not the journey that was inspiring me. And with these guys, I already started ideating on some concepts and ideas, and we already actually had one idea which we started actively pitching and developing. So it was beginning of 17, beginning of 18, sorry. And in parallel, I met founders of Trade Republic. Back then, it was called different name. It was actually called, the company was
How is it called?
Neon Trading. Actually, the name of the company was, if I'm not mistaken, Neon Trading. 21.17 something. And why this number? Because as far as I remember, it was the atomic mass of the neon gas. Quite a nerdy name. And it was actually a bit hard to introduce yourself when I was calling to first partners that we had to onboard or like connect to. And they were asking where I'm from. And I was like, yeah, it's neon trading. Then, telling all these numbers.
Sounds a bit dodgy, doesn't it?
It was actually, it's an interesting point you said. First time I saw their website, I found it very anonymous and very kind of dodgy in a way, because it was saying, hey, well, we have this mission to disrupt trading, and high level it sounded cool. I actually first saw this website when I was in Frankfurt, and they were saying they were searching for COO, but I didn't kind of consider it at the beginning. And then when I first spoke with the founder, with Christian, then I was like, hey, it's actually quite a real thing, and actually some guys are there behind. And we had several interactions. Beginning of 18, I met also the first investor, or one of the first investors, like co-investor Ingo, and he was the director of Zeno company, which played a significant role in picking up Trade Republic in the first years, before all VCs discovered it. That's when the journey started, and I joined the company, and we built it in quite some of a big thing.
Yeah, so 10 million customers, huh? Well, looking back, obviously Trade Republic is clearly a massive success, right? No one could argue that. But at the same time, at the beginning, just as you said, it looked a bit dodgy. So I'm just wondering, how did you build your conviction about joining them so early in their journey?
Look, so first of all, you talk to people, and it's always back then, lots of startups were actually writing me. I remember, and most of the things were going on LinkedIn. And why? Especially because when Berlin was picking up also financially, or rather Fintech scene in Berlin was picking up, there was lack of talent in Berlin because the branch was, the sector was kind of new. So naturally, you got a lot of messages when you were working in Frankfurt or other financial centers. And to be fair, none of the ideas caught my eye, and this one was just really close to my background. So what I did and my projects, because as mentioned, several of them, for example, were in trading and advising different stock exchanges. So when we just first contacted, I was like, hey, well, we just need to talk, because I just need to see what they plan. And then, of course, you meet the people, and on one hand side, you look at the people and how they act, how they think, how logical the concept looks. On the other hand, also my past experience helped me evaluate, is it really technically and operationally feasible or not? And to be fair, we had first call with Christian, and then I came to visit them in Berlin. It was actually very interesting day. It was Sunday. We somehow decided to meet on Sunday in the morning, 9 o'clock, and the first office was in next to Yorkstrasse, in one of the backyards. Very unclassy, let's say. And I came to I left the U-Bahn. I was walking to the office. There was not a single person. Super cold as well. It was February, I think. And then I put some coffee on the way, literally not a single person. Then I come to this gate, and then I call Christian, and he comes down. Hey, I'm Christian. Yeah, cool. And then I came to their office, and then met also co-founder Thomas, and they're quite tired. You could see that they were grinding. Both. It was Sunday morning, but you could see that they had some long weeks, and then we started chatting, and everything that we discussed, from what was planned in terms of which partners and how it should work high level, and the scope, etc., and how actually we're gonna make it commission free, and why is it feasible. I said, from my past experience, I didn't doubt it, because for me it made sense. Which I think someone maybe not from from this business, from trading, they would maybe challenge it or say, hey, I mean, I don't know how it's gonna be. And then at some point I was like thinking, well, when you're in that phase, 25, 27, 28, and you already have some experience that you build up, but you still have the freedom to decide what's next. And I thought to myself, hey, actually, if this thing doesn't even work, I can always call my partner and come back to consulting, which we actually agreed with him back in the days when I was leaving. So then I said, hey, well, let's just try it, do our best and see how it will gonna evolve.
That's really exciting. So it's Sunday morning, you're meeting these two co-founders, they're tired. It was long before this praise for 996. Were you not scared of long hours and everything that comes with the role?
No, not at all. I actually never thought about it. I mean, first of all, I was used to working a lot and hard because in consulting I had different projects, and on one hand side, additionally have also traveling, which is not the funniest part. In the beginning, you find it cool, but this excitement vanishes quite quickly.
There are so many jokes about people in consulting traveling to random places.
Yeah. I mean, luckily I was traveling mostly to bigger cities, so it's a good side. But I know, for example, people that are doing some maybe accounting or audit, and then you go to some random middle of the known village. Then it's another side of it. So no, I wasn't stressed about it. I never thought about it, actually. I was really at that point. I was really just excited about creating, and actually for me it was the goal, the ultimate kind of target also for myself to actually find a company or direction where I can really build something. Because as mentioned in consulting, of course you do create projects, you do support different changes in the companies, but it's always kind of a very small part of the big picture, right? If you consult Deutsche Bank and Commerzbank or something, the impact is very local. Here you have really opportunity to build everything from A to Z, and we did whatever it takes, to be fair. All of us, like the founders, I mean, of course they pulled the whole road, especially, but then also the initial team, everyone who could perform as much as they could, they actually did.
Cool, I love that. So just to make sure we're on the same page, Trade Republic started as effectively an app to buy assets.
Mm-hmm. Yeah.
So at what stage did you guys realize that you had product market fit? And what was the evidence of having a product market fit?
I think I would say this story is rather special in one another way, because it didn't. It picked up quite quickly, but maybe I need to describe the background. So the founders, that's why they say this foundation, the start of the company is 2015. The founders met before. I think it was 3 years before, and they already started working on the application. Back then, as mentioned, the company was called Neon Trading, and they had an app which allowed to trade like with paper money, but without real processing, nothing, kind of a game. And when they launched it, they already saw some considerable traffic. So they had some thousands and thousands of users without pretty much, maybe making a huge marketing. And I would assume for them, at least as founders, it was already kind of initial feeling that Germany might follow the same way as US did with Robinhood. So I would say that maybe it was the first kind of, or it's my assumption, it was the first maybe check for them. Then when I joined the team and pretty much the core team built up around 18, we were already working on a real app for trading. When we were connecting the clearing bank, the notifications, so getting the banking license, so the security brokerage license, and we were building the whole end-to-end chain. And when we were launching, for the launch we also did. It wasn't like a test, I would say, but it was like kind of a more of like a way of growing initial customer base more quickly. So we launched a stock exchange game again. So it was under the name of Trade Republic. We launched it, I think, in September 17, and then the app looked like the app we were willing to launch for live. The only thing that had a trimmed functionality, so there was not real stocks, so just like paper money. But there was a leadership board, and we were giving prizes, so people could trade, and whoever gets back at a better return, they were winning, iPods, some Bose headphones, some money prizes.
That's so cool. I've never heard of that. That's such a fun way to launch a trading product.
Yeah, it was actually very successful. So we did it in September and ran it really structured. So it was a couple of months. There were like some stages, and there was leadership board, and people were actually quite active. And then we were doing some marketing as well to kind of grow the interest. And I'm pretty sure we generated quite some thousands of users. And then pretty much they all got converted into the waiting list, which we launched in January 18. So when we got the banking license, January 19, when we got the banking license, and then we kicked off the operations, then we slowly started releasing the users from the waiting list, and they slowly started to trade. So to answer your question, when we went live, it was already somehow, I won't say clear, but we knew that the product works. The app was technically better than anything else on the market. It was by far best implementation, I still think. Like the way how the app looked like, and smoothness, and all the transitions. We paid a lot of attention to details, and it was free. I mean, commission free kind of. We paid only €1 for the €1 for processing, and quite fair. It was best that market could allow you to use as a B2C customer. And for us, there was like a check, and all these kind of preliminary signals how people use the stock exchange game, the past applications. There was already kind of like a built up confidence that things gonna work. We didn't knew, of course, and no one could forecast that it's gonna explode like it did during COVID, and we're gonna have like 1 million customers in a couple of years. Of course, you can't do it at that point, but we all pretty sure that the journey is starting, it's gonna pick up. We need to run quickly, and then time will show.
That's incredible. I'm really keen on learning more about this COVID kind of part of the history. However, coming back to the humble beginnings, what do you think were the 2, maybe 3 foundational decisions that mattered the most for the product's trajectory? Could be like product, regulation, market entry, compliance.
So building such a product includes lots of factors, right? First of all, license. You at that scale for this scope, you just need it. And I would say back then, the work around licensing process was done very well. It went rather quick if you compare other licensing journeys that other fintechs are having. Look at Revolut or any other kind of banks that you're trying to get licensed. Sometimes it's not straightforward, especially if you have some customers and some size. Back then we were still just starting, but still it's quite a journey. So that was done very well, and also on a technical side, we built pretty much everything in-house, which was a necessity back then, because on one hand side, the prices of systems were kind of high. I mean, if you would go and just buy some off-the-shelf brokerage software, you will quickly run hundreds of thousands of euros on fees, and we just simply didn't have that capacity to fund it. On another side, for this specific use case, there was nothing existing in the market. No one gave you such systems which are really very lean. So maybe focus only on one exchange, and they support just some specific number of instruments and products, but that are also able to be very scalable and quick in onboarding and processing, to support this kind of really seamless experience in the application. So that wasn't existent, and we decided to build it ourselves. And I think still we did really good job in specifying all those systems, while thinking through the whole processes, so that everything could scale pretty well during the first months, but also later on. Also, you mentioned COVID, also during COVID. So of course our team grew, and technical team grew, and we were improving nonstop different things. But let's say operationally, things were working how we kind of thought of them from the very beginning. The trade execution, the cash settlement, the cooperation between Solaris Bank and HSBC, everything was from day one, and it went for at least a couple of years when we were like really already getting bigger. And I think it's very important, especially if you build if you build a B2C fintech. Of course, it's rather a luxury, and you don't always have volumes. But in this case, retrospectively, if you build it less scalable, that can really break you down very quickly. And if you have tons of users and you can't just technically perform, then it just steamrolls you. You don't even have time to kind of think of rebuilding something, because you're just fixing the machines that doesn't work. So I think it was overall very well architected.
I love that. So basically, your advice is build your own software if you want to scale.
It depends. To be fair, at times are also going, and changing. So what was in 2018 and 1917, also the way how people were building tech and how they do it now, it's also completely different stories. Also depends on the niche, on the area where you're acting. They might be also really good off the shelf solutions. But on the other hand, really, if you do something special and your concept is special, then building just can give you some leverage that others don't have. So yeah, I think that's at least for Trade Republic, is a really important part of the journey. And you could see it across some other fintechs like Revolut, if I'm not mistaken. They build a lot of things internally, or at least also they're praising this culture that whatever problem they have, they just do build a system, and then if it's great, then they just outsource it, which is also quite a kind of cool concept. Yeah, this was definitely good for us.
All right, so COVID hits. What happens next?
That was a fun time. I remember we were sitting, I think January 20, and so COVID was kind of picking up, but it was still in the news, and it was somewhere there in Asia and kind of far away. And we were, I remember there was one evening we were sitting in the office, and then randomly we had these Corona beers, even though we were not like Corona fans or something, but we had Corona beer in our hands, and then we hear these news, and then we had a couple of jokes about Corona, like, well, hopefully this beer, is still without any side effects. So yeah, that moment looked rather distant. But then week after week, we started thinking, well, what do we need to do to, be functional? Because it was a really complete black unknown how institution is going to work, how stock exchange is going to work, how the broker, our partner, Lange Schwarz, is going to act. And it was, let's say, weeks of preparation as well, because we were thinking what if scenarios and what we need to do with employees. And what we need to do also with trading, also with redundancy. So we also, at that moment, we already had another exchange as a fallback exchange for something that doesn't work with the initial one. And it was also a helpful thing to have if you don't want to be binded only on one partner. But still, it was really, you couldn't expect even what was then later on. So I think as for us and for any organization, there's lots of learning. especially when the country decided to kind of do the lockdown and people were sent to home office. And it was quite a grind on different directions, because on one hand side, we were kind of squeezed from pretty much all sides. So on one hand, we started seeing massive growth, and people were just at home, they accumulating money, maybe were bored. News were streaming nonstop about crypto and stocks and so on, and like our onboarding pretty much exploded. And this was already first factor, like just technical systems were really like grinding it, onboarding, trading, everything. On another side, also partners were also sending their employees home. Like, for example, our identity provider back then, I gave them the forecast of whatever X thousand of users in December before Christmas, and they're like, yeah, cool, that looks like a plan. And then in 3 months I come and they're like, guys, like, push harder, we have like 5 hours queue. And they're like, Ivan, what can we do? We're sending people to the
5 hours is not that bad. Someone should have gone down, so you should have clearly had a moment when everything went completely south.
Ooh, I think the longest I remember, some people were complaining that we had 8 hours of onboarding queue, which pretty much, we started with a couple of minutes and it was our go-to SLI. But then, yeah, at some points, at peak times, it went longer. But in the end, we had to battle it. So we were hiring people like nonstop. It was also a bit of a rough of onboarding for many of them, because we were just having laptops in the office, because we were not allowed also to let people in the office. So we just had laptops like, on table by table by table, and they're just coming in, picking up, going home, logging in, VPN, or all the secure connections and everything. And you just start organizing them completely online, which is also an interesting feeling, because you don't even have a second to kind of get this kind of personal touch in WhatsApp, but you just really, hey, let's grind. And technically also, like, the volatility in the market was significant. I remember there were a couple of days. There was one Monday when markets crashed in like around 10-13%, and that was a lot of flow and lots of trades. And especially when you build a system and you think, hey, well, everything's kind of working as planned, right? Let's code 0, 1, everything's logical and you can predefine everything. But when you run into such systems which generate millions and millions of data points, and especially on the very short time frames, so we're dependent on latencies or like some kind of data exchange, then sometimes like things are popping out that you can't even maybe describe. And actually, we also had, on my team and our teams, had invested a lot of time to actually figuring out some edge cases that you just have them. I think it's part of any job and any big scaled up IT system that on one hand side you are building, but on the other side you're really maintaining and seeing that overall it performs at some level of quality and performance and stability.
So what do you think was the most underrated product or operational decision that you had to make during the time of COVID? So you experienced this explosive growth, right? Customers keep knocking on your door, like your capacity does not scale proportionally to the user growth. Obviously, there were some decisions that you had to make. Okay, what do we do now? So what do you think were the most underrated ones that you've done?
Underrated in terms
of you didn't really expect it to work, but it's worked.
Man, there are lots of decisions, and everything was just a firefighting modus, to be fair. I would rather say that lots of scaling pretty much. I mean, our customer service grew very quickly. I think what was really lucky in quote, but what we really did, it was good that we started outsourcing also the customer service. At least I started it in the autumn before it, and we already had a partner company, and then we already had a team there. So we had a capacity to actually ramp up more or less quickly with them, the number of people, also just to support the growth. But on the other hand, sometimes it was also not enough. So we actually were searching for other sources, and we were also onboarding people from other companies, because you can imagine it's not only like right now with AI you can process a lot of things, but then, for example, back then you had to prove, and you still have to prove for example, the address. So you need to verify the address of the customer and the different rules and how you do it. But building like a really large scale OCR system back then was really too much of an investment, and we also they had no time for that. So yeah, we had like really teams of like people that really worked for us principle, were proving it and checking everything. And by the way, I think it's also one of the strategically good sides or like decisions that we did. We paid a lot of attention to compliance from day zero to all the processes. And we, even though maybe, from the outside, if you look at the product and, what's being offered, some other, especially competitors, they ask, well, but how can they offer it? They do some shortcuts and or some tricks. But we always intrinsically checked what's needed, what has to be done by regulation. And we, in any process, even if potentially could make some shortcut and maybe say, hey, well, I'm gonna do it later. We pushed through and just did at the point when we had to do it. So also, for example, these onboardings, yes, we thought, hey, well, it's kind of slowing down our growth if you calculate it like this. But then we said, well, then we just scale people and just do it. But then we have really clean books, and we have like also data that's also reliable for later.
When you say scaling people, what are the numbers we're talking about? Like how did you scale the team from the beginning of this explosive growth till, let's say, when it's normalized?
But never normalized. We did well, like when we were kicking off, we were around 10 people. It was beginning of 18. End of 17, beginning of 18 was like around roughly 10 people, but like everyone, so the founders, a couple of developers, and a couple of business people. Then we went to roughly 20 something, I think, end of 18. So we scaled already other different functions, including compliance. And then during our launch year 19, if I'm not mistaken, we were somewhere around 30, 40 people. So we didn't grow that massively, but we were kind of building up personnel to kind of support the future growth. And especially also we were professionalizing more in product and tech, the infrastructure and security and so on. Because in the beginning, of course, we still focus more on really rolling out the first version, but then you really you build up the skill. And then, I think when COVID hit, till end of 20, we were roughly 170, 80. I think it's like 4x probably.
Quadrupled.
Yeah. And like ops also, that spot became like operations as a department became pretty big very quickly because how we structured it initially, at least. So we had co-founders, and then we had one like head of marketing person, one finance, and one operations. So we five kind of really were like pretty much making it happen within each of the functions. So operations back then kind of gathered historically, firstly, all the people that were building the product. I mean, building from business perspective, right? So ex-consultants, ex-bankers that knew how trading runs, and then we really specifying the processes and running them with the tech people, reviewing them, testing them, etc. Then this team scaled also towards operations, like pure daily operations. We had a separate team for market operations, just really over observing trading, so nothing really breaks down, everything runs well. We had settlement operations to really make sure that everything is booked well and the records are clean and so on. Plus, then we started building up the customer service, first level, second level, internal, external. So yeah, at some point the ops department exploded also quite a bit. And yeah, I mean, during COVID, as I mentioned, before COVID, like you were having time to really build up really more of a personal also relationship with the whole team, and it was kind of more. It was also a bit of a different feeling because it was when you come from garage and you build things together, you spend a lot of time together as well, so on weekends and evenings, and pretty much any spare minute you could invest. But then after COVID as well, when you scale quickly and then the teams come in and you just get to know people, but of course, all the dynamics is a bit changing, and especially with such growth, you're focused on really running as quick as you can and jogging all the balls in the air.
Sounds like a tough one, but also exciting. So obviously, during this explosive growth, you had kind of experienced a lot of problems, but did you have an actual moment when you saw that the ship could just go down?
No, I wouldn't say so. I would rather say we had intrinsically the whole team, or at least, I mean, you can sign off for everyone, but like the whole company, we had intrinsic responsibility of what we are doing, because trading, it's not just selling shoes or t-shirts or something per website. So it's a very regulated industry. You're really regulated, you're really observed, you have serious partners, these partners also have names, so we had really high level of responsibility to everyone, also including the customers. So I wouldn't say we or I was kind of at that moment when we really started this hyperscale, that we were really kind of at some point thinking, whoa, damn, now it's going to crash against the wall. But you do have this kind of tension, let's say, from day to day, hoping that everything's going to be right, because you can't forecast it, right? You also saw examples in the market with GameStop and with other big players. And of course, there are some things that people expect in the past, but especially if the market develops into a mass product, the new asset classes come in, the new regulations come in, then you can't know every situation up front. And of course, in those situations, you need to navigate them really wisely, because you can't be insured against any repercussions. So this was actually our driving force. And yes, you said about stressful. We were pretty much trading was starting at 7:30 in the morning, and we were already, I think, starting at 7 every morning, just already buckling up and having our coffees and preparing for the start of the day. Because start of the days actually were mostly the stressful ones, because when something happens overnight or some news, and there's lots of volume in the morning, and then you need to make sure that it all works well. Plus also when the US turns in, so around 3-4 o'clock in the midday, there was also lots of flow and lots of volatility, and that's when we were really buckled up and ready to tackle it.
That's fun. All right, let's try to reflect on this experience. So personally, I told you I used to work at Twice, which is a massive fintech as well.
Yep.
And after leaving, I met so many people who were like, "Oh, like I want to get into fintech," whether from a product kind of role or maybe do engineering or do banking. There's so many things you can do in fintech.
Yeah.
So, like in your opinion, what do you think outsiders misunderstand about fintech growth stories in general?
I think it depends overall on type of persons, right? Like maybe let's zoom out. Like some people, they think they would like to build startup, right? Or at least at some point it became kind of more of a trendy thing. if you can say it like this, and people are like, hey, I want to leave my company and I want to build something myself. But they don't even know if they, as a person, fit into this or not, because also it's a very much different type of work that you do in any kind of startup, comparing to rather big corporation or some kind of established business. The level of urgency and sometimes attention and the level of energy that you need to invest is different. They're definitely really demanding also roles in other areas, but still it's something that some people just don't reflect correctly. And then if you nail down to fintech, in the end, what some people maybe, I just assume, because overall a lot of my contacts are like really people that I know from fintech. They're really very much mature in this sector, so they know their stuff. But I would say maybe some people could think that, hey, well, fintech, they hack somehow magically the system, and especially like back in then, like 2000 maybe 16, 17, when things were just picking up, and they're like, they just somehow do something just magical
In a
in
happy
the end.
way.
Exactly, but in the end, you're regulated business, and you do start building things, and you look differently at the things. You do them, or you try to kind of innovate, and you do it, but you're kind of binded in the rules and regulations that you have to follow. And maybe someone would assume, hey, well, no, let's break things and do something, special, and just launch and then iterate. It doesn't work in fintech like this, or at least depends on the concept. There are some concepts that you might pilot lean, and you can learn rather quickly from users. But a lot of concepts or businesses, they require a lot of front loading, of everything, resources, energy, work, without even seeing first results. And that also applies to Trade Republic. So you can imagine how much of a journey the guys did, like the founders. And then when we already established this initial team, and we were building the already product version for launch, we still invested like 1.5 years to make it happen, with the license, with all the systems. It's just really, we had just quite often just period of times when we were just nonstop shipping function by function, and it was like day by day by day, you see no result. And then in a year, you then are able to kind of run the first trade in the test environment, and then you see that kind of performs. But maybe you're not even able, because at some point the systems won't connect, because some IPs were not kind of whitelisted, etc. So you do need a lot of stamina and pretty much focus on the long run and not on the short-term kind of outcomes. And I could assume that some people might get surprised by this, or rather also feel uncomfortable, especially if when you're used to kind of other industries when things are really more rapid.
Love that. Thanks for sharing this reflection. All right, so you've left them quite some time ago. So what keeps you busy these days?
I left the company end of 20. It was, as you remember, it was a time of B2C fintech. Everyone was building a neobanking quote. There was lots of also excitement and money in the market. And after this, I started another company. We were actually building another neobank with some specific focus. But then we had a lot of parts of the equation right. So we had enough capital, we had a great team internally, my co-founder, and the hires that we found and recruited, and the concept was actually very valid. But the market, as you remember, started to change, right? We ran into this kind of hyper hiring wave of 2021, 22, when barely could find people, and they were just costing exorbitantly, and there was like bloodbath on every corner in the sector. So I was building for a couple of years, and we did a couple of pilots as well from the concept. And at some point, we just and decided to actually move on. And since then, I was actually working a couple of years on other tech projects and advising companies and as advisor, and also board member, mostly fintechs. And somehow most of them, they have something to do with trading, of course, or some kind of an investment into assets. And to be fair, I really got excited by AI, but not in a way maybe that you, I mean, everyone is excited about AI, but maybe a small pre-story about myself. I first started working with neural networks, which was the name back then when people were using them. In 2004 or 5, I was still in the, I think it was first or second year of bachelor, and one master student came to us and he did a presentation about neural networks. And it was in Kiev, you remember, like it was still like Pentium computers maybe, and the DSL connection just came up. And I got so excited about it. Like literally, I was coding the whole summer neural networks. I was teaching them. I was doing some, back propagation algorithms of, tuning the weights. And actually, they were showing results. I could forecast some, trends and so on. It got me incredibly excited, but it was obviously a bit too early. And maybe it's also one thing that it's not only good to be right, you should also be right in the right spot, right? So I really love the topic, and but still, it was really, there was no data, no infrastructure, so I moved on in more of a classical financial, let's say, occupation and work. But then when also like this wave of generative AI picked up, pretty much a lot of concepts and the approaches that they use now. When I read right now, I'm like, hey, actually, I mean, it's not the same, but the overall logics and the approaches are kind of similar. So I'm really excited about this development and how you can actually cross it with finance right now, because I do believe there's a lot of opportunities still in any concepts. And of course, right now you see that B2B AI SaaS is really booming, and everyone is automating any possible process and kind of operation in bigger businesses or SMEs. But still, there is also tons of opportunity in B2C fintech and how people will actually interact with their money going forward. And yes, regulation will have to play along, and they will be picking up. But as we know, they quite often follow the adoption, and careful, cool concepts that really cross AI and finance is something that I'm really excited about. And currently working a couple of projects. Might send you afterwards after the podcast on a specific topic, but the focus is B2C and fintech.
That's exciting. Okay, folks, if you're building on the intersection of fintech and AI, oh my God, all the buzzwords in one sentence, then reach out to Ivan. And if you happen to live in Berlin, we're going to leave his LinkedIn in the description of this podcast. So do reach out to him, and maybe we'll be lucky enough to grab a few beers with him, just as I did a few months ago. Ivan, thanks for making time for us. And this one is gonna get published in the upcoming weeks, and I know that there are some big events that are coming for you in the upcoming weeks as well. So we're excited for you.
Thank you.
Thanks for being with us, and I hope you're gonna get a few useful connection from the podcast as well. Thank you.
Awesome. Thanks for having me. Also for a really interesting discussion, and also was happy to share a couple of stories how things are working out in different times.
Cheers.
Thank you.